Hi Benedict, it's time for a monthly video blog, and at this point in time we cannot ignore what is happening in the Middle East with the uprise in the conflict between the US and Israel on one side and Iran on the other side. Donald Trump has even said that the worst is yet to come. According to you and your colleagues, what is the base case scenario?
Hello Bjorn, and thank you for having me today. Now, I'm not a political analyst. I'm not going to pretend to be one, but I think it's important first to keep in mind that markets have been anticipating this for a while. It's been a gradual buildup. We've been seeing oil prices that have been rising since the beginning of the year. Today, what I can say is that predictive markets, based on what traders think, is a way to kind of see what markets are anticipating. They anticipate a ceasefire towards the end of April. Now, of course, that's being pushed back every day as we speak, and we know that we are going to live with a period of uncertainty for a while.
So Benedict, there's this new uncertainty, a new factor of uncertainty in already very volatile times. What does this mean for the economy? What will we feel as consumers and in the industry?
It will depend on the persistence of the shock. Now, the transmission to the economy is mostly through energy prices, oil prices, and natural gas prices. In the US, both oil and natural gas prices can transmit really quite quickly, so within about 3 months. In Europe, it's a little bit more tricky. Oil prices can be relatively quickly, but on natural gas prices, there's a distinction between consumers and industry. Consumers, it's a relatively regulated market, and transmission can be slowed by fixed contracts between consumers and gas companies. Whereas for industry, it can be as well quite quick. And that's bad news and bad timing for two reasons. First off, Germany was starting to see a little bit of a recovery on the industrial front, so this is obviously going to hamper that recovery a bit. And also, European natural gas reserves are relatively low compared to the last couple of years due to bad weather, so they're going to be refilling all these gas reserves at a time when gas prices have surged.
Now, Benedict, if we look back at the past month, we've seen a lot of nervousness among investors, mainly driven by AI and the potential risk for big software corporates, maybe also for people being laid off. What is your vision on that? Now,
AI has been more of a market mover, actually, than geopolitics thus far. AI, what's really markets have been used to overperformance of these AI tech firms. The earnings have been really good, but they've been used to overperform. So now it's will these tech firms overperform as much as we expect them to overperform? And then there's a massive amount of investments that going into these the infrastructure around AI. We speak about $660 billion US dollars. Now that's 2% of US GDP, but it's the entire economy of Belgium when you compare this figure. So it's a lot for markets to digest, the profitability going ahead of these investments. But I would say that AI is here to stay. We know it's transformative, and so the impact on employment. As an employee myself, it's a question that we ask ourselves a lot, but I would be more concerned of the impact that AI will be on changing people's skills and being able to match those skills to these new jobs than on the impact on unemployment as a whole.
Now, Benedict, we've seen two factors. There's geopolitics and there's AI, mainly driving everything in investment and what investors are looking for. What does this mean for your investment strategy?
We knew that with Trump, the only certainty is that there will be uncertainty. So when you talk of uncertainty, in our investment approach, we're remaining steady on diversification. Diversification is very important at the moment. Diversification within our investments in the US. So not purely just on tech firms, but going towards broadening out towards more smaller, medium-sized companies that are expected to benefit from the whole AI infrastructure investments in supply chain. There's also the broadening outside of the US, so investing in emerging markets that are expected to also, especially in China, benefit from the AI transformation revolution undergoing. And then there's the diversification amongst asset classes, so investing in precious metals, industrial metals as well, that benefit from AI and from this geopolitical uncertainty. And then finally, I think the main challenge that we have today is understanding the US dollar. We remain cautious on the US dollar, but of course, in these uncertain times, the US dollar has also been a good safe haven. Comparing this safe haven capacity with a macroeconomic policy that's been very uncertain with very little visibility. So we remain cautious on the dollar.
Bénédicte, thank you very much and see you next time.
Thank you very much, Björn.